Would you rather own OpenAI stock or Ethereum, ETH or SUI or Say or
I
Solana?
would I would rather own a currently I would still rather own crypto because the rate of growth of the total value being transacted is increasing significantly over time.
Raoul Pal predicts that digital assets will be integrated into the traditional financial system. The cryptocurrency market capitalization, currently at $4 trillion, could reach approximately $100 trillion by 2032 if current growth rates are extrapolated. Bitcoin represents only a portion of this market. There's also the technological aspect, the smart contract platforms, and the application layer being built on top of them. Many people don't understand what influences the price of Bitcoin. They think it's a diversified asset, but it's not. It's an asset influenced by the economic cycle, which in turn is linked to the debt refinancing cycle. Liquidity is the most important macroeconomic factor in investment history. Therefore, if everything is cyclical, diversification loses its appeal. The cyclical nature of an asset at this early stage of its adoption is evident to everyone. We've seen very similar patterns with Amazon, Google, and Facebook. They all experienced drops of around 90% shortly after their IPOs, which is typical when network adoption begins to consolidate and volatility decreases over time. Cryptocurrencies have experienced significant drops, the most recent an 86% drop. In 2022, a 70% drop. Next time, it could be 50%. Volatility is very real. But cryptocurrencies are not a cyclical asset that follows this pattern. It's a logarithmic regression channel because it's a network adoption model. Every time the price goes up, it reaches new highs. This is exactly the same as with Google and Facebook. Cryptocurrencies should be considered an early-stage technology investment with a specific volatility profile in portfolio terms, and allocations should be adjusted accordingly. The first time investors face a market downturn, they are usually caught off guard, and it's necessary to have a mental model to cope with it. According to Raoul Pal, this is why choosing Solana, SUI, Bitcoin over AI stocks. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Crypto, there's two different levels. One is go back to its liquidity. So liquidity has hit crypto more than anything else. And that is the FedNet liquidity that has shrunk. So it's hit that. But then we've got OG profit taking we've seen. So that continues. And that kind of makes sense. And you've got this pervasive opinion that the 4-year cycle is what it is. And therefore you must sell in November and go, October, November, and go away and come back in, 12 months time. So there's that pervasive feeling. And then there's, I think, somewhere there is some damage that was done during the October the 10th flash crash in crypto. Now, I don't know if there's a body there, but my guess is the balance sheets of some of the market makers are impaired. So it means that they can't provide as much liquidity as they have done, which exaggerates price moves. I think that probably makes sense. We're also seeing some unwinding of the token holdings by the DATs because of the construct that they've got. They buy back their equity. So, that's ugly, and that will probably continue if price action continues like this. So you've got this supply going on, less liquidity around because of the Federal Reserve and the Treasury, and less liquidity in markets because of impairment after October 10th. Makes it just feel not great.
Talking a little bit about L1s, look, that thesis, that trade has been very wild since the inception of crypto, like the infrastructure layer. If you were early in Solana, early in Ethereum, early in SUI, say pretty much any reasonably valued, and I say that with air marks just because you talk about metrics. I would be curious to understand, I put out a blog post over the weekend talking about like, how do we value these things? And of course, the bear market sharpens the mind. Right. And so I'm curious, how do you think about investing in a layer one, even like Ethereum at 400 billion? It's only cranking out 1 to 2 billion of fees. 200 to 400 times revenue seems widely overpriced. Certainly not a value buy in my mind. There's people that are calling, Ethereum is going to go to trillions. I don't really see it. How do you think about that, like that L1, L2 trade that you talk about?
So I think using discounted cash flow models on crypto misses the whole point of what they are. And I think it's it's a fool's errand to do so. These things are priced off Metcalfe's law. Same as Amazon was, same as Google, same as Tesla, same as Meta. They all traded at massive valuations in early stages because it's not about the cash flow. It's about the growth of the network itself.
At Binance Blockchain Week Dubai 2025, Raoul Pal, co-founder and CEO of Real Vision, presented one of the conference's most anticipated macroeconomic analyses. In a conversation with Nick Buckrin, CEO of Coin Bureau, Paul challenged the prevailing narrative in the crypto world. This is not the beginning of a bear market, but a correction within an ongoing bull market. Liquidity accounts for 90% of Bitcoin's price, and 2026 will be marked by an explosion of liquidity. Bitcoin's price moves based on global liquidity, not the myth of the 4-year halving cycle. Paul described several converging forces: the Trump administration's fiscal stimulus plan in 2026, massive money creation through regulatory mechanisms, changes in leverage ratios, SLR, forcing banks to absorb more treasury bonds, and an anticipated depreciation of the U.S. dollar in early 2026. Paul refuted the idea that the recent sell-off indicates the end of a cycle. Bitcoin has reached new highs. Almost no other asset has done so. Historically, however, significant corrections in sentiment within bull markets are normal, such as Bitcoin's 50% drop in mid-2021 before reaching new record highs. For traders and long-term investors, Paul highlighted several macroeconomic indicators to watch: global M2 money supply growth, a weakening U.S. dollar, changes in monetary policy from the Federal Reserve and the U.S. Treasury, and changes in banking regulations, including adjustments to the SLR ratio. Altcoins like small-cap stocks are influenced by the economic cycle, and more specifically by the ISM Manufacturing Index. As soon as the ISM crosses 50, risk appetite skyrockets. Retail investors seek the greatest upside potential, and altcoins still offer asymmetric returns that AI-related stocks cannot match. He added that AI is already largely funded by institutions, while cryptocurrencies remain underfunded. The phrase, "don't fight the Fed," is frequently used, but the real battle for the cryptocurrency market isn't against Jerome Powell's Monetary Policy Committee. It's against the monumental wave of global liquidity that determines the fate of all risk assets. This is the message Raoul Pal emphasizes. His conviction that cryptocurrency prices will continue to rise to all-time highs remains unshaken, and he urges traders to be patient, reminding them that dips like this are common in bull markets and serve to test their conviction. So, forget the pessimistic predictions and wait for the volatility to subside. The crypto community can not only strengthen investor confidence, but also ensure the long-term viability of cryptocurrencies. This requires adaptation and innovation to transform adversity into opportunity in a constantly evolving liquidity landscape.